Okay, folks, welcome to Sunday Night Futures Live. What we're going to talk about tonight, obviously, the futures action. We'll talk about the debt ceiling. We'll talk about valuations of the market. And we'll just talk about how effed up Congress is and how much trouble Trump really does have in front of him, despite the fact that he's going to control both the House and the Senate. It's not going to be an easy fight. I think it's been displayed clearly that we have a dysfunctional Republican Party, a uniparty. The uniparty is much stronger together than what is the Republican Party, sad to say, but as broken as the Democratic Party is, so is the Republican Party. We need term limits. We need primaries to get rid of these rhinos. So we have a lot to go over. We'll talk about seasonality and how this week normally sets up and how the following week sets up, because we're only talking about a couple of trading days left in the year now. So it's going to be not a few days left in the year. So seasonality is favorable. We'll go over the numbers in a moment. We have open here the E-minis, and we are up about 1/3% at the open. Let's say hello to folks as they populate in. Tim, welcome. Seymour Rivers, thank you, sir. Appreciate that. The lovely Jody, welcome. Very Merry Christmas to you as well. Everybody, whatever you celebrate, doesn't bother me. Enjoy the time with your family. It's that time of year. So thanks for being here. I don't expect a very busy night tonight, given everybody getting ready. I know my house is getting ready right now. So we will. Hey, there he is. Talon, welcome. Denny, welcome. All right, so we're populating. Good stuff. All right, so let's talk a bit about George. Welcome. And Merry Christmas to you as well. Thank you. Okay, so now the futures are up on the S&Ps about 0.37%. We're gaining steam here. This is a 15-minute chart. Let's go down to a 5-minute chart until we finish out the first 15-minute bar. Very strong open here. NQ up just shy of a 0.5 percentage point. Interesting. YM. All right, so we have the Dow futures, which are down at current, but coming off of their lows. They don't look down, though. Did they set up a new contract? Yeah, no, they're up. So Dow futures are up. There must have been a lag there of some sort. RTY up over a 0.5 percentage point. So from what I'm looking at here, EMD, let's take a look at the mid caps. I'm getting the vibe that we are getting a pullback on yields. Mid caps up 0.41%. Let's check in with yields. Yields, the 10-year is down at current. So the price action here makes sense. Nothing strange. We have volatility, which is dropping off. We saw a big topping tail last week on the weekly chart, on the daily chart. Let's head back. Let's check in with the Forex markets. The dollar is down, but that's not accurate. We're up relative to the close on Friday. So technically, we are up. We rallied in the after-hours session. Relative to the after-hours session, yes, we are down, but versus the regular hours close, We are up at current, but we are losing steam. Euro. Euro is down relative to the close on Friday. That makes sense. Let's check in with the weekly chart here. Now, we're approaching very critical support levels here on the euro. So why does this matter? For those folks that want to buy emerging markets, you want to buy gold, silver, the mining stocks, you can't have a weak euro. Just the way it works. Can't have it. So if we break down to new lower lows, week over week, that's a major problem. That would be a continuation breakdown. And that would not bode well for gold or anything that you're trading that trades inversely of the US dollar. Let's check in with the Japanese yen. Same deal here. Japanese yen at current down over 1/3 of a percentage point. And we're just off of very, very critical support levels here on the yen. Very critical support levels. Let's get back to the 5-minute view. Let's check in with commodities. We'll begin it off with gold. Gold down at current. They can rally this. They can rally it. It's holding the 21 period EMA 30-minute chart. Silver up. Wow. Up nearly 0.75% at the open here. Very powerful move on silver. You don't normally see that, but we're getting it tonight. 30-minute view again. Yeah, this is a continuation move up. We have a nice breakout here, 30-minute view. Let's stick with commodities. Let's check in with energy, light sweet crude. Energy stocks are pretty oversold. They are pressured downward due to the fact that oil has been weak in the past several weeks. However, it showed some strength in the back half of last week. So we'll see what this week brings. All I really care about at this point in time is, do we get a new weekly higher high? You could see on this weekly chart, we have a wedge formation. Let's try that again. And they're trying to break it out at current. What's going to matter here is a new weekly higher high. Now, the thing to keep in mind about any price movement this week that puts in higher highs or higher lows, watch the volume. I can pretty much guarantee you, I will bet you a wooden nickel that volume is going to be extraordinarily light this week. So be careful. Don't get baited in to a rug pull. But I think oil is setting up here pretty nicely. Let's pause, say hello to folks that stepped in. Mr. Pete, welcome. Welcome. Larry, so Warren Buffett is buying stocks again. Should that it depends upon what he's buying. I heard he bought something. I have a chart I'm going to go over in a moment of his war chest of cash. So whatever he's buying, I doubt he's being overly aggressive. He's got a ton of capital on the sidelines. So I wouldn't read too much into it. Normally, when he believes that it's a buying opportunity, he says it publicly. And that keeps him in favor with the politicians. So that's the reason why he does that. Plus, it helps his position. Let's check in with natural gas. We had a really good week last week with natural gas. Oh, beautiful. We're gapping up here 4.5% on natural gas. So I sold covered calls on Boil, BOIL. It's a leveraged product of natural gas. 55 strike. They may hit that target this week. They expire on the 15th of January. So maybe I'll sell puts against it. Members, more to come on how we're going to manage that position. I don't want to get overweight natural gas. They call it the widowmaker commodity for a reason. So it's doing well right now. You never know what tomorrow brings with natural gas. Extremely volatile. So we did natty gas. Let's check in with the food complex, corn. For this, we want to go to a weekly chart to get a vibe for what's going on. And on a weekly chart, we're looking pretty good. In fact, we have a position on here on corn. I sold an iron condor. I think it's an iron condor. Pretty sure it's an iron condor. I forget. I got to go back and check. It's not a huge position, but I'm pretty sure it's an iron condor. Let's check in with wheat. Not looking good here. I would avoid wheat. Larry, do you still have that position in corn? CS. This is soybeans. Soybeans looking interesting here. It looks as though we put in a bottom. They rallied it off the lows of the week. We have a very tight Bollinger Band setting up here. We may be putting on a trade here very, very soon on soybeans. Okay. Let's see what else we got going on here. What did I miss? Bitcoin. Bitcoin had a rough weekend. We were well back down below 100,000. We have not taken out last week's lows. Okay. What else did we miss? Oh, live cattle. Got to do live cattle. Live cattle pulled back last week. Here's the weekly chart. No follow through on that big breakout. So we'll be watching for a new weekly lower low here. Perhaps sell a call spread or buy or just short the futures if it breaks the new weekly lower lows. We're up at current. Okay, I think we covered it. That'll do her. Let me just, sorry, folks. A little bit of a technical glitch here. Oh, there we go. Okay, better. Let's try that again. All right. Share screen, audio on. Good. Okay. For those folks that are just signing on and you're not part of the forum, I put a request out to enter your stock chart requests. For those that are not signed up, all you need to do, you don't need a credit card, just sign up. We do have a premium area. That's the Bull and Bear Banter chat room. Very small fee if you'd like to join up for that. Great crowd, good conversation. And let's see what we have so far. Oh. Bonnie, I saw you post something. Why is it not showing here? Oh, look at this. Oh, look at this. George, look at what you posted. We were just talking about this last week. That's beautiful. God darn, that's beautiful. This is Quebec City, folks. Wow. Good stuff. Okay. So for those that have not entered your symbols, please head on over. Post them right here. ATOM. I have a couple of my own symbols I want to go over tonight. CQP. SEDG. Okay. All right, folks, we're going to be sponsored tonight by TrendSpider. Minimum of 35% discount off of their product. I'll be demonstrating their seasonality and their charting software. Link below for that discount on YouTube, above on Twitter. Get your automated technical analysis. I mean, smooth as silk. If you're not experienced with technical analysis and you need a way to guide yourself through identifying support and resistance levels, it's a great way to validate the accuracy of your support and resistance levels. And if you're experienced, like me, I still use the automated trend lines. Many times I'll draw my manuals first, and then I'll overlay the automated trend lines to see whether or not I missed anything or how accurate my trend lines are. And it helps out from time to time. So very powerful charting software. Powerful. I have a couple of symbols I want to go over tonight. BROS is one of them. Hood, another one that I picked up their scanners using a Bollinger Band squeeze. You could do back testing. Whatever model you develop, you want to back test it, go for it. It's there. They have a new AI product, which I've been playing around with. I am not able to speak to it yet, but it looks pretty darn good. Custom indicators, automate your trades through their partnered brokers, and just a powerful sort of functionality here. So sign up, 35% minimum off of your subscription. Link below on YouTube, above on Twitter, and see you on the other side. All right, let's talk about economic data coming out this week. It's not going to be chock full. We do have some important numbers, though. Of those reports that are going to get reported, they can move the market. Consumer confidence coming out tomorrow. That's a 10 a.m. number, day traders. So if you're into a trade at the market open, remember you have a 10 a.m. report coming up. Tuesday, we get durable goods. That can move the market. Durable goods, that's a measure of your sales of washing machines, dryers, etc. Of course, we get Christmas. Then we get initial jobless claims. We're going to go to a chart of that in a moment, which I'm going to be calling a demarcation line for initial jobless claims because they've been moving up. Friday, fairly quiet. Not much happening here. Now, in terms of valuation, the market is extremely expensive. We took out that prior high, but we didn't close there. But last week, when we began to sell off, we were above the highs of 2021. So we pulled back a little bit here, But in all probability, by the end of the week, because I do believe they're probably going to close the markets up higher, we will close above the highs of 2021 as we proceed into 2025. Another way to take a look at the valuation of the market is a valuation of the U.S. equity market relative to global equities. And here's a blurb. The valuation spread between U.S. and the rest of the world are unlikely to persist indefinitely and are long overdue for a reversal, in my view. I agree. The shift is poised to become one of the most significant trends for investors in the coming decade, in my opinion. So, I mean, we are so far beyond historical norms in terms of valuations versus rest of the globe. It's crazy. I mean, it's really hard to believe how far we've come, and the further we get beyond. I mean, we're forget about a 2 standard deviation move. We're beyond a 3 standard deviation move beyond the norm here in red, and this goes back to 1950. So we are going to get a reversion to the mean. Everything always reverts to the mean. So those who choose to ignore that, okay, they're going to pay the price, and I'm not saying dump your stocks, just tighten up your stops. Trailing stop loss orders, let the market take you out. Now, moving on to inflows into the equity market, the U.S. stock market saw a weekly inflow of $62.4 billion last week, the largest inflow since 2020. Good stuff, right? Was it really that shocking? I say no, because I said on Thursday night, I think we're going to rally. And I still think we're going to rally. Why? It's a contrarian indicator, bullish percent index of the S&P 500. When you get extremes, it begets more extremes. So we have a big low here, perhaps even a multi-year low in bullishness. It's not multi-year, but definitely 52-week lows on bullishness. So is it any great surprise to see that you had money flows moving into equities? It's a big guess. Extremes beget extremes. Now, looking at seasonality, and I always get asked, if I sign up for the 14-day free trial offer, what level do I get for TrendSpider? It's the one I am using. Whatever functionality you see that I use, you get. So seasonality for the month of December, 67%. Let's drill down to a weekly view. And you can see this final week up 71% of the time. Now, to be fair, we do have 2 days next week, which are not going to be reflected on here yet. The 30th and the 31st. So I guess that takes us into week 53. Actually, no, week 1. That'll take us into week 1. I guess this is for leap year or something like that. Okay, so going into the weekend, we had, God forbid they were to shut down the government. God forbid, how would we survive without the federal government being open? Well, they spared us the tragedy that would be government not working for a few days. Government shutdown is averted just after deadline, and Congress rejects Trump's debt limit demands. Now, I got a problem with this, with President Trump. He didn't want to have a debt ceiling debate for 2 years. Now, I don't cheerlead for anyone. What that leads me to believe is that he was going to do a lot of deficit spending for the first 2 years, and he wouldn't have to worry about a fight in Congress. As it turns out, in March, there will be another battle setting up, and you may be saying, well, he's not going to have a Senate controlled by the Democrats, and he's going to have a bigger majority in the House. Really, does it matter? You have the Uniparty out there. 38 Republicans voted against the bill that Trump endorsed. So we ended up with this, whatever this ended up to be. So the current package, to be fair, it went from 1,500 pages down to 118 pages. And of that, $100 billion in disaster aid. The people of Maui got nothing. The people of Appalachia got nothing. Now they want to send them disaster aid and agriculture assistance to farmers. So there's going to be another battle in March, and I'm not confident. I'm not confident that they are. He's got 100 days to get things under control. He's got to show this world, not just the citizenry here, the world, that he's serious about cutting debt, because our debt is just insane. We are by far the most indebted country on earth. We have 34.55% of all the globe's debt, and we have like 4% of the population. It's kind of bananas. China has 16.2%. Japan has 10%. So it's really the big three in terms of debt. And we are the Pimp Mac Daddy. Now, I play different versions of this from time to time.
As I said,
but it's always good to hear from Milton Friedman and to remind people that it's the government that creates inflation.
As I said before,
don't listen to what they have to say about big bad corporations. Sure, they'll take advantage of a situation, but it's government that creates the environment for inflation. This is different than the one I played the other day.
As I said before, keep your eye on one thing and one thing only: how much government is spending. Because that's the true tax. Every budget is balanced. There is no such thing as an unbalanced federal budget. You're paying for it. If you're not paying for it through it in the form of explicit taxes, you're paying for it indirectly in the form of inflation or in the form of borrowing. The thing you should keep your eye on is what government spends. And the real problem is to hold down government spending as a fraction of our income. And if you do that, you can stop worrying about the debt.
The great Milton Friedman. Sean, welcome. Merry Christmas to you, my friend. Okay, Michael. All right. Welcome, Michael. Okay. So this is how we have a government run by the land of misfit toys to apply a holiday adage to our current situation. I find this shocking, absolutely shocking. Just in missing Congresswoman Kay Granger, Republican of Texas, who hasn't been seen for 6 months. This is a sitting Congresswoman, was found living in a dementia care facility. She's been in office since 1997. She's 81 years old. And nobody's talked about this. And if you take a look at this, it's really startling. And this is one of the primary reasons why we truly do need to have term limits. The percentage of Congress that is over the age of 70. Now, I know a lot of people over the age of 70, even into their 80s, they are on, but that's not everyone. That is not everyone. There comes a point in time where, you know what? If you're going to sit in that office, you're going to be over a certain age. Perhaps, and you know what? It could start in the 50s. They need to have cognitive ability to do the job. So It doesn't bother me if they start in the 50s, but to have nearly 25% of Congress over the age of 70, and many of them over the age of 80, that's structurally unsound. These people have already lived their life. They don't have kids in school. They are so distant away from the day-to-day life of bringing up kids and going through the grind that they just don't get it anymore. They're corrupt because they've been there for so long. They've been compromised. We see it over and over again. Think about it. Why has nobody been screaming from the rafters about a congresswoman that's missing for 6 months? I digress, but these are the problems that we have here in the United States that are real. They are really serious problems, and this is what Trump is going to have to contend with. So buckle up. I don't think this is going to be an easy ride for him at all. Auto delinquency rates hit highest level in 14 years. I'm kind of out of sequence here. I meant to go to that after the debt. So auto loans on the rise. And we got the economic data out a few days ago about the manufacturing PMI and the services PMI. Services is in expansion. And they show that manufacturing is in a contraction, has been in a contraction for the past 2 years. And you got to wonder whether or not it's more serious than what it may be. It's showing that we haven't been in contraction in manufacturing in 2 years, but believe it or not, the energy used, this chart here is the energy consumption in the world's top economies. China red, US dark blue, EU in light blue, India rising, Japan declining. We flatlined 2005. Have we really seen all that much growth here in the United States in terms of manufacturing? I don't think so, because it's certainly not reflected in our energy usage. Whereas in China, as in Japan, they are expanding and expanding rapidly. So my fear is that what we're going to get, and I've said this already, and I'm going to repeat it yet again, I fear the revisions that are going to be coming out after the election, and in particular in February. So this is non-farm payrolls. We've talked about this quite a bit, but more news continues to come out. This is concerning. Non-farm payroll employment in Q2 2024 actually declined by negative 0.1% instead of growing plus 1.1% as initially reported by BLS. In other words, the 442,000 jobs added in Q2 will likely be revised negative in February of 2025, according to Philadelphia Fed analysts. Fed estimates revealed that employment was lower in 25 states, higher in 2, and remains the same in 23. This should result in another large downward revision as seen in August, when jobs were revised lower by 818,000 for a rolling 12-month prior period. The strong labor market, parenthetically, air quotes, strong labor market data beats expectations. They are revised massively lower several months later. The problem is that they get the headline number that comes out. What does the stock market do? Goes up. Even though they revised down the prior month's numbers, the next month, stock market still takes the new headline and goes up because nobody reports on the revisions. And the momentum traders, they're not going to complain. They know when they need to stop out. So the public is led to believe that you have a strong vibrant employment picture, and they get that wealth effect. They look to take on more debt, which they do. They take on more credit card debt. and they invest in the stock market at exactly the wrong time. And just go back to last week when you saw the largest weekly inflows into equity since 2020. So staying on the topic of initial jobless claims, this is a great chart. And this is COVID. We get this report every Thursday. And this is initial jobless claims each week. And you can see the COVID spike. We dropped down, we flatlined, but now we're beginning to inch back up again. And this 260 mark is the line in the sand. We see a breakout above 260. That's going to spell trouble for the U.S. economy. And my guess is it'll just probably coincide with the revisions downward on jobless claims. Revisions downward on non-farm payrolls. So we spoke earlier about Warren Buffett and him buying some stock of late. We'll go to a chart of his cash position in a moment, but this is not just Warren Buffett. These are the whales that everybody talks about that are out there. They're the smartest guys in the room, and they are hoarding cash like at no other time in history. What do they know? And here is Warren Buffett's war chest. Warren Buffett's Berkshire Hathaway has a cash position of $325 billion, or 30% of all of its assets under management, which is Buffett's largest cash allocation since in 35 years. I don't know what that sense. So it's not just Warren Buffett. It's the commercial banks and the Warren Buffetts of the world that are hoarding cash. They're getting ready for a buying spree. And what might make them think that there is a need to raise that capital? Well, one thing that certainly is not helping, and we spoke about this over the past couple of weeks, market breadth, meaning advances versus decliners. This is why on Thursday nights we take a look at the equal weighted charts of the S&P 500 and the triple Qs and the cap weighted charts to see whether or not are we getting a broad-based rally or are we getting a Mag 7 rally, a very narrow rally with only a few stocks driving the equity markets up higher. That's why we do that. And it gives us a really good view of the health of the underlying market. And market breadth fell to its lowest level since November of 2023 on Thursday, with fewer than 53% of S&P 500 stocks trading above their 200-day moving average. Think about that. 53% of the stocks on the S&P 500 are trading above their 200-day moving average. What does that tell you? And then you get this. Yield curve. We spoke about this on Thursday night. And we closed just off the highs of the week. Not only that, last week we saw a breakout to new multi-year highs on the yield curve. This is 2s versus 10s. And to take a look at the monthly view with only a couple of few trading days left to go, we are well within the red zone of where in prior times we've seen the equity markets, in particular the S&P 500, which I have overlaid here, buckle. Right here, where the line in blue is, that is where you saw the yield curve break the S&P 500. Where will it break it this time around? Anybody's guess. But this is the state of the U.S. economy and the state of the equity markets as we proceed into 2025. President Trump may have both houses of Congress, but he does not have a loyal base inside of Congress. And Mike Johnson, the Speaker of the House of Representatives, is not a warrior. He's got to go. He's got to be voted out. So I hope that gets taken care of yesterday. Mike, she's been missing since July. A congresswoman's been missing since July of this year. TZ Burton, welcome. All right, let's do some chart requests, and we will call it a night. Let's check in, make sure I didn't miss anybody. Jody, I'll go over the SQQQ. TQQQ is just going to tell you, or is that the short ETF? No, SQQQ is. TQQQ, what is that? Yeah. Okay, we'll go over both. Okay, XLE, Bonnie Bean, NE. Okay, let's do it. All right, since we have it up here, TQQQ. This is the leverage product of the triple Qs. Let's go to the weekly view. So last week we saw an outside reversal bar on the TQQQ. Now, seasonality-wise, we're up this coming week almost 80% of the times, and we begin the year off strong as well. So I have a short position here using the SQQQ, but I'm not looking to add to it just yet because I'm relying upon seasonality to help guide us through this the first couple of weeks out of the new year. Now, taking a look at the daily view, I think that what needs to happen here, you need to retest 82.52. I'd be a buyer for a swing trade up to at least $87 a share. Just keep in mind that you have Stokes trading down below 50. Rallies tend to fade, so please be careful. Don't believe me? Look at the rally that faded on Friday. We did not close at the highs of the day on Friday. It faded. So when you get stochastic, which is a momentum indicator, trading down below 50, rallies tend to fade. I ought to have a T-shirt made up. Rallies tend to fade. Now, for the SQQQ, it's just going to be the inverse of what I just said. Taking a look at a weekly view. Nice week last week, outside reversal week. Stokes are hooking up. Momentum is building to the upside. Daily view. We closed off the highs of the week last week, but we held a breakout at around $30.75. I want to know if we break out. And we'll keep that active for a few days. And you can see, obviously, seasonality is not favorable here. Ignore this chart, this candlestick. And the first few weeks out of the year are not good. So odds favor, in terms of seasonality, odds favor bulls, no doubt about it. ATOM. Good looking chart. I think we went over this one the other day. I know this has been trending on the feed in the forum. The path of least resistance is clearly to the upside. We've broken through the upper band of resistance. You're probably going to get a retest of around $8.90 this coming week. Good breakout. But again, I think you can get a retest back down here. If it holds that retest, I think you're going to rally up to around $10 per share. Good reversal bar on Friday. So I think we went over this chart on Thursday, if memory serves me. We had the bearish reversal bar. I'm sure I was not bullish on it. Now that we have this new bullish reversal, we had a bearish reversal bar. Now that we have a bullish reversal bar, I become a little bit more constructive because investors have spoken. They want to take it up higher. QP. Oh, 8 times. Let's check out seasonality there. It's only 8 years worth of data. So take it with a grain of salt. Up about 56% of the times this coming week. And this is a monthly. How do we get back to a monthly? Okay. Up 50% of the time this coming week. And the first few weeks of the new year, seasonally favorable, very seasonally favorable. So seasonality is in your corner. Let's take a look at CQP. Cheniere. Okay. So this space has gotten beaten up pretty badly. I bought more FLNG, a competitor, I guess, to Cheniere. Did they change their symbol? Wasn't their symbol LNG at one point in time? Yeah, Cheniere Energy. CQP. Oh, this may be a trust. Okay. So two different entities. All right. So this is the value of the automated trend lines. You had a great Bollinger Band squeeze back here, very, very tight. It fired off to the upside, and then we hit a wall of resistance. I didn't draw these. These are the automated trend lines. Now we're pulling back. We have support right down here, which marks the top of the prior trading range at around $51 per share. That's probably where we're going. I'm bullish on natural gas. You have the Ukrainians that are out there saying they're going to shut down the pipelines from Russia into Western Europe. I'm sure the Europeans are really pleased with the Ukrainians, who they've been supporting along with us for the past 2 years, 2.5 years. Oh, going on 3 years now. Going on 3 years. Yeah, so this is where we're going. We're coming down to $51 per share. We may even overshoot down to $50 per share. So I would wait here. I see no reason to go stepping into the breach yet. So I would hold on to until one of these support levels gets tapped, and then we bounce. And that price is, again, at $50 per share. Let's check in with seasonality. Now, this is a monthly view. November, December, seasonally unfavorable. January, February, by far the two top months to own CQP. Interesting. Let's drill down to a weekly view. Good. The next few weeks are pretty good for the stock. So I would look for a rapid sell-off this week. And me personally, I would look to step into the breach and pick up some shares. But again, down between $50 and $51 per share. SEDG for Talon. Well, this one corrected, huh? Big time, huh? You need oil to go up to buy solar stocks. And I like this setup here quite a bit. So Man, this thing's gotten beaten up. So step number one to buying a stock that's been in the bear market, it's got to stop going down. Have we stopped going down? The answer is yes. We stopped going down back here. The week of November the 18th, let's overlay the automated trend lines. We have broken out. Oil is poised to perhaps move up. It has not broken out yet, but I think it may just very well do so. Momentum is measured by Stokes are now beginning to rise with higher lows and higher highs. Bullish on a weekly time frame. You have resistance immediately above here. I'm good with scratching the itch here, opening up a position, and then buying more on a breakout above resistance. But it must close there. I believe this is optionable as well. I think we've traded the options here before. So I'd be fine with selling puts here. Checking with seasonality. Not a good week to be buying the stock. The next few weeks are not great, but that changes a bit in Q1. And then as we get into Q2, it gets much better. So SEDG, I like selling puts here in this environment. And I wouldn't mind putting on a long position for the longer term, especially if oil breaks out. All these alternative energy plays are correlated with oil. So if oil breaks out, they'll break out as well. Watch oil, and then I would trade SEDG accordingly. XLE. We have a position on in XLE, an iron condor, and we also began buying a individual stock as well. I haven't gone directional yet with XLE, but I want to, because what you're looking at here, let's take the automated trend lines off. Is a real steep downtrend channel. Momentum is measured by stochastics, is flatlined. I skipped the weekly view. On a weekly time, they really need to gap XLE up tomorrow. And they need to close it above 84.30 per share, because that was the breakdown point. You could see here that we broke support last week. That is no bueno. They need to gap it up. Now, in terms of seasonality, this week is a good week. The first few weeks are a mix. It's not wonderful. It's not horrible. 50-50, I don't like the odds of 50-50. So that's about what you get for the first several weeks out of the year. But then as Q1 begins to come to an end, things, or mid to Q1 to the near end of Q1, that looks very, very attractive to begin accumulating a position. And then in Q2, it's game on. That's the best time of the year. So XLE looking interesting here. We already have a position. I would look to add more to it. I'm focused right now on the weekly chart. I want to see a gap up, and I want to see it close above that support level on a weekly time frame, not just a daily time frame, a weekly time frame. NEE. Weekly view, next era energy. It broke support the week before last, continuation breakdown last week. It did find support last seen back in July of this year. So I would give this another week or two to see whether or not this is stable support, because if it breaks, it's going a lot lower. It's going to come down here to around 61.56. That's a big drop. So I wouldn't even sell puts at this point. I would wait to see whether or not 69 holds. And then if it holds and we begin to stabilize, let's take a look at the daily chart. You had a good day on Friday. In fact, I would argue that what the hell just happened here? I couldn't repeat that if I wanted to. Daily chart. You could argue that we broke out. Boom. We definitely broke out. Look for a retest here. If you're going to buy this no matter what, you got to use a stop right below last week's lows. Because if it closes back down below that mark, that is a weekly breakdown, a failure to hold the July lows. That's going to be a major problem. Looking at seasonality to see whether or not you have the wind at your back. Not really. I mean, again, 50-50 odds do not excite me. So that's pretty much what you get averaged out over the next couple of weeks. And even into the first few weeks of the year, it's not exciting to me. It's 19 years worth of data, but it's not exciting to me. So I would enter cautiously, use a tight stop right below that weekly support level, and that will keep you safe. Thanks for being here, folks. If I didn't get to your quotes because you're posting them in the chat, you got to join the forum. That way I could see everything in one shot in the forum. It doesn't cost you anything to join. The chat room costs you a couple of bucks. I would encourage you to join that. It's a very small fee. And don't forget about TrendSpider. Minimum 35% discount code below. Get all the functionality that I use. If you sign up for us, silver and gold level member, 14-day free trial offer. You're not ready for that? Use the link below. Take advantage of their discount. Use my discount code CON35. Get all this good stuff. Head on over and let's just say goodbye to people. Sean, you're very welcome. Tim, have a great night, my friend. Yeah, same to you. Same to you, Tim. Thank you very much. Same to everybody. Have an awesome Hanukkah, Kwanzaa, Christmas, whatever you celebrate, Festivus. Jody, thank you so much. The best to you and your family as well. Thank you very much, folks.